legal tax-free investments. Now, I know with what is going on and the high cost of living and whatnot, people are looking at investments that they don't have to pay tax, but legally. So I'll share two options, and one is more flexible, one is a bit fixed. Okay, so first one, we have the infrastructure bonds. The infrastructure bonds are actually tax free, which can help you invest your money, make more money for you, and evade tax legally. Now, for infrastructure bonds, this is basically lending the government money, and the government invest in either roads, railway, and whatnot, and in return wanarudisha na interest. Okay, so they are normally issued by the government of Kenya through the Central Bank of Kenya, CBK. Every time you hear about infrastructure bonds, just know they're going to be long term, but don't feel discouraged. They always pay out some coupons, and that is basically some interest within every 6 months. So at least kuna pesa inakuja kuja pale, and also depending on how much you invest, kuna yenye hata your capital inarudishwa the first few years, yote inarudishwa. So it depends, it has a lot of details into it and whatnot, so it depends with how much you also invest in. And if you wanted to exit before maturity, you can use the secondary market to sell it, but it will be dependent on the demand and how the market is, so you can either gain or lose. So it's not that flexible that unaamka tu leo and you just want to exit from it. It's not as easy. Okay, but it is a good way you can be able to also generate an income for yourself if you buy multiple infrastructure bonds, so that you find yourself almost every other month you're receiving some money. Okay, now the other plan is different, because this one is managed by a fund manager, and we have the Imarika investment plan. I know mmesikia nikitaja sana, but even hii Imarika investment plan is tax free. So basically every year we issue you with a document that you use to claim taxes. So when you're filing your returns, attach your document and the details in that document for you to be able to request for the refund of that money. The good thing with also this one, it's a bit flexible. For infrastructure bonds, it's simple interest. For the Imarika, it's compound interest. That means on a daily basis your money is earning. Then minimum investment is 1,000. So mwenye akona kidogo, mwenye akona mingi pia anaweza amua kuinvest, na mtu mwenye anataka kuwa aki top up every other time. So hata kama ulianza na 1,000 na next week unataka weke 50k, you can be able to comfortably do it, and your money earns on a daily basis, as I've just mentioned. Now, management fee is normally 2.5 of interest, and pesa yako inabaki intact. Okay, so that is the major difference between the two. So depending on what you're looking at, then you can be able to make a decision. Every plan that you take should align with your financial goals. For the Imarika, minimum years is 5 for the account to be running, but you can start withdrawing your money from the second year, either full withdrawal or partial withdrawal, but even during that time you can be able to do more top-ups. And that is why I tell people, by the time you're taking a plan, make sure that you lock it in for the duration that aligns with your financial goals, so that you can also take advantage of the benefits. Like this one is tax-free, and also the interests are better than these other short-term plans. Okay, so now you know, unangoja. I also help people invest in the infrastructure bonds as well, and the treasury bills and whatnot. So if you're interested, just look for me, talk to me. Okay, I hope you have learned, and I will be seeing you next time. Bye.